is not the way Pimco wanted to end the year.
It certainly isn't. I think they kind of expected this because a lot of this is institutional money coming out. You know, retail money acts pretty quickly. It's kind of emotional. They pull their money right away. Institutions take a lot longer. So Pimco knows that there's a lot of this money that, you know, they have a process, they have to deliberate, and then the money comes out. But this is still pretty bad.
And how are they going to reverse this? I mean, what they presented already is not enough, it seems.
It really comes down to performance, right? Like, you need to see this new management team. They've been trying their best to reassure everyone, but what investors need to see is performance kind of hitting it out of the park.
And performance over a period of time.
Over a period of time,
because
exactly.
We should talk through how some of this works with the institutional investors. Many of them invest in Pimco on the advice of consultants.
Absolutely.
Crazy things happen at Pimco. The consultants put the firm on a watch list, and then after a period of weeks or even months, the institutional money managers, the pension funds, the endowments make their decision to pull money from Pimco, and it could take at least as long, if not longer, for them to go back in.
So you're in a really tough spot right now because you only have a 3-month track record of this management team to look at. So you're having a very hard time telling your clients one way or the other. The safe answer is to say, okay, Bill Gross left, let's just take the money out, because I don't feel like having having that liability out there. So when they're trying to make that decision, 3 months it's outperforming 67% of peers right now, which is pretty good, but it's also not the best. You know, people are having a hard time making that choice.
Right, no one's going to get rewarded for sticking their neck out in this instance. Now, do we know if this money is directly going into Bill Gross at Janus?
It's a different strategy. They aren't totally comparable. So there is some money. I think, you know, people are loyal to Bill in a lot of cases, so you are seeing some of that come through. But I think that, you know, if you're leaving the total return strategy, you want to stick with the total return strategy, probably, unless you just really love Bill. So there hasn't been an exact one-to-one, but, you know, Janus is kind of reaping some of the benefit.
And if you are an investor who wants a total return strategy and you no longer want to be with Pimco, where are your choices?
There's been a lot of money going to TCW, MetWest. Legg Mason's also seen a big benefit. And I think Double Line has done pretty well this year as well.
And I guess there's also still BlackRock and Lumen Sales, which have
a lot of
funds.
The immediate decision appears to have been, you know, stick it in an ETF that has exposure to fixed income, and I'll figure it out later. So, you know, BlackRock's ETFs did really well and things like that.
And what is Pimco saying about these withdrawals? How are they trying to calm down the investor community?
They're saying, you know, we're doing our best. We're working really hard to, you know, manage our fiduciary duty, and these aren't as bad. Things are still slowing. They're trying to say, you know, the very worst was at the very end of September and early October. We're doing better than that. So it's kind of, you know, things are bad, but hey, it's better.